What's up, everybody? Welcome to another episode of Swan Signal Live. I'm your host, Senior Analyst at Swan, Sam Callahan. Before we get into today's episode, which is sure to be a great one, I want to bring up Pacific Bitcoin. That is the conference that Swan throws every year in beautiful Santa Monica. That's happening October 18th and 19th. It's more of a festival. It's a ton of side events. There's going to be people from all walks of life, Bitcoiners, celebrities, professional athletes. We try to make this a really fun, unique Bitcoin conference. So check it out if you're interested. If you use the promo code SIGNAL, you get 10% off. And if you pay with Bitcoin, you get an additional 21% off. So 31% off your tickets right now if you go to Pacific Bitcoin and check it out. On today's episode, we're going to be talking about Bitcoin mining. And I think there's been a ton of focus on the launch of these ETFs. And now the community is kind of shifting its focus to the next important Bitcoin event. And of course, that is the Halving, set to happen around April 20th this year. The immediate impact of the Halving is actually on the Bitcoin mining industry. And I can't think of two better guests to talk about Bitcoin mining than the chairman and CEO of Barefoot Mining, Bob Burnett, and the CIO and head of the new Swan Mining, Rapha Zagury. Thanks so much for coming on the show, you guys. It's going to be a good time.
Good to see you both.
Thank you. Great being here.
Yeah, so let's maybe start. I guess there's a big elephant in the room is what we have to talk about from the get-go is the launch of Swan Mining. And Rapha, you were the head of mining. And you were the kind of the one spearheading this entire effort. It was very, under wraps. We kind of kept it secret. Over the last 6 months, you've been maybe the most busy person at Swan, I'd say. And now it's over 5 exahash. And let's just start with like how you got this idea, how you started to get, this project off the ground, and when you were like, okay, let's do it. Let's go straight into mining.
Yeah. 515 right now,
515.
so number go up. So yeah, this has been insane, Sam. I mean, we look at what has happened in the last year, right? And look where we were a year ago and where we are right now. It's astonishing. It's really amazing, and I think it's a testament for the people that we brought at Swan and the clients that invest alongside with us and the brand that we've created. Corey has always been, I think, very on point on this, on building a very strong brand. And I think mining is coming as a huge part of that, right? It's the first part. There's more coming. But I think the speed that this came to fruition, it's even to us that were working on it from the beginning, it's just surprising. Couple of things just to tell you a little bit about the story on how this came to fruition, how we got where we are. This all started around June of last year. We always, of course, had an interest in mining. Mining for obvious reasons. It's something that is super important for the Bitcoin ecosystem and everything at the end of the day that we do at Swan. We only ask one question: is this good for Bitcoin? And if it is, it usually makes sense for us to do. If it has no impact on Bitcoin, then it's very easy, or bad impact, very easy to abandon ideas. But mining has always been on the radar. Corey and Jan actually were in the board of Riot in the past. We've been very close to a lot of miners out there for several reasons. Great passive invest, right? It wasn't something where we were going to be coming in and managing any of the facilities, just as an investment, a pure Series A investment in a company. And as we looked at that, as part of the due diligence process of knowing the company, knowing a little bit more about the mining space, there are a couple of things that very quickly caught our attention. The first one was when we look at the price of the Asics compared to historical prices. The prices were, at the rock bottom of a cycle, very low. To put in perspective, some Asics were trading end of 2021, which of course there was exaggeration to the other side, right? But they were trading above $100 per terahash. And when we look at them, they're like trading at like $10, $11 a terahash. So it just that caught our attention right away. Like, okay, maybe And the other thing is that if you look through previous cycles, there's very high correlation with ASIC prices and Bitcoin price. So whenever Bitcoin price rallies and we enter into a bull market, right, it just starts to make sense to hold some ASICs. So our original idea is we invested in this company. By the way, we invested in the company, and then our attention right away turned into, well, maybe we should buy some ASICs for our clients, and see what happens, right? Because we the talk about the ETF, as you said, was starting to happen. So and starting to get heated up. So there was evidence that we were getting into a bull market. So ASICs just seemed like another asset to get into in Bitcoin. If we look at everything that we do, right, and particularly I think on my seat as CIO of the company, it's all about allocation, right, and allocation of capital. So when I look at the different allocations of capital, the allocation that, of course, all of us liked the most is Bitcoin. Just buy Bitcoin, and I don't think anything can beat Bitcoin in the long term, right? It's for a long time as we demonetize other assets. It's going to have the best risk rewards out there. But in the short term, there are things that may be counter-cyclical that may work well, and investing in ASIC seemed right away at something as an allocator that made a lot of sense. So we made that decision. Corey also had some contacts on the industry, people that he knew that were OGs in mining from the day that we started having conversations. And, we decided just initially, okay, so let's raise some capital, let's talk to some investors, and let's buy some ASICs, right? So that was the first. That's kind of like where Swan Mining was born. We started buying ASICs late July, early August, approximately. And as we started buying the ASICs, we were very worried about starting to move prices, right? Because we were buying at the low of the low. And this is the main reason why we kept this under wraps, because we didn't want, people out there to know that we were buying ASICs and, Swan is coming into mining and prices would go up. Excuse me, and that would defeat our whole thesis, right? So we acquired it. And the other thing that surprised us was when we started having conversations around raising capital, we got very good feedback, very good traction on that. And, that made our life, of course, much easier.
If you look, could we maybe pause just for a second?
Yeah.
And maybe, Bob, you can kind of talk on this a little bit too, but of why, ASIC prices remain so depressed despite, the price run up. Do you usually see large discrepancies in the price of ASICs versus the price of Bitcoin? Is there like a lag there? I'm just wondering why there was such an opportunity to buy these ASICs so cheap at this point with, Bitcoin up big this year. Maybe you could talk a little bit on that.
I think there were several factors depressing. The first was the looming halving. So there's fear from a lot of people, especially larger organizations. Second, if you look at the public miners, they were hurting. Like they were hurting badly. Yeah. If we look at that time period that Rapha was talking about, I mean, they're like questionable survival sort of thing. But I still think several of them need certain things to fall into place over the course of this year to survive. Some will do well, but some of them are in trouble. And that's true on the private side too, by the way. But I think obviously the public miners are front and center. There's also there's something I published maybe a year and a half ago. I call it the Miners Trilemma. And so in the Miners Trilemma, anytime you want to put up a new mining operation, three things have to come together: energy, the mining equipment, and the capital. And my theory around the Miners Trilemma is that at any one point in time, one is always very difficult. And the moment one that is difficult starts to become easy, it forces a different one to become hard, right? So you're constantly chasing on this triangle as a miner. And to survive in the long run, by the way, you better be good at all three, because at some point in time, every one of them is going to be hard. So if you're not equipped to deal with the market in all three pieces, then mining's probably not for you. So, we looked, by the way, first of all, even before I go any further, I am in awe and at what Swan accomplished in such a small period of time. I think it is unprecedented in the history of Bitcoin mining. As a guy that does that for a living, it was very, very impressive. And I also, one of the things I like about Swan, because I think we share the same philosophical approach, is living the ethos of Bitcoin and doing what's best for Bitcoin. So small things like just staying private about it are really great gestures to the whole community. So I really applaud that and appreciate that.
Gotcha.
Yeah.
No, I was so that's interesting. I love that trilemma that you just mentioned. It makes a lot of sense. And so, Rapha, you were mentioning like, okay, you could find the capital, you got the equipment, and they were really, really cheap. I guess the next step was to find the energy, right? So so can you take us through those steps of how you decided to deploy these, 70,000 plus ASIC machines that you guys bought? Because that's the next step.
Yeah, side commentary here, but I think I heard Bob mention something like this way back when we started doing mining, exactly the trilemma between, machine prices and energy prices, right? And capital. And that was an inspiration for us as well. The capital we were able to secure, again, I thought coming from that side, I thought the capital was going to be the hardest one, and not that it was easy, but it wasn't. I mean, it was easier than I imagined originally.
But I do have to say, Rapha, for you, it was easy. Like this last year was very difficult in general in the market to raise money. Like for me, what I can say is we expanded a lot at our own scale, not at the scale you did. We expanded a lot at our own level, but finding the money was the hard part in 2023.
Yeah, because I think electricity prices went down too, and ASIC prices were down, right? And then but the capital wasn't there, so that's the trilemma right there last year.
Right.
Yeah, it's hurting everybody, right? And the public miners, as Bob was saying, they still are under pressure exactly because of that. They have a very, very high cost of capital, right? They're still paying very high interest on their debt, right? A lot of them have machines that are not extremely efficient, but to their benefit, a lot of them have lower energy costs. But answer your question, that was the second reason why we became quiet about this as well. Because we saw, as we started to knock on doors of hosts, we said, okay, we bought these machines, right? It's just stupid to sit on them and put them in warehouse because these are money-making machines. We should deploy them, right? So we started calling people out there, and we saw a lot of distressed opportunities from some of these hosts that had, machines from a lot of the companies that were going bankrupt, that had space readily available that we could deploy with energy costs that, weren't extremely cheap, but definitely cheap enough to get us through the halving and beyond and still be profitable. And as we were doing that, right, we wanted to remain quiet, same thing, because the second that, people knew that we grabbed one opportunity and the second one, then the third one, I guarantee the fourth one wouldn't be that easy. We've deployed on 7 sites, and we are on the way to deploy to 10 by March with contracts that we have ready lined up, right? And that includes US, offshore. But the key thing for us, and I think just to add something to that, is we also sat down on the table with a lot of these hosts. And what we propose to a lot of them is just like, listen, at the end of the day, Bitcoin is all about alignment of interest. What about, you guys just pass through whatever energy cost you have to us, and we'll share on the upside, right? So we'll negotiate a profit share agreement with you. We pay the energy, and that has worked really well because they are 100% incentivized that most of our machines are running, with very good uptime, because they only get paid substantially if we hash. So that was something else that we've worked on that I think has helped us tremendously, and we just like that as a structure because again, at the end of the day, alignment of interest is everything.
Yeah, I was wondering, Bob, maybe you can speak on this, but if I'm a miner, like you've been mining, at Barefoot Mining for years now. If you're thinking about a site, or like, what are some of the things is there like a checklist that you look through? I mean, is it just like the energy cost, or do you look at other factors when you're thinking like, okay, we're going to maybe deploy at this site, and like how many opportunities come knocking on the door, and maybe how do you like source these things? Because I'd just be curious to see how that like process works.
Yeah, great question. For me, we do have an algorithm, and it starts with jurisdictional acceptance. That's number one for us. So is the place in question open to what we're doing? And that's at multiple levels. So as is probably obvious, do we have to worry about some sort of a state ban or country ban coming in? So that's number one. Number two, there's a little more local issues, often things like noise ordinances or things like that. And we don't want to be a nuisance, right? But the third thing is the community itself favorable or at least neutral toward Bitcoin and Bitcoin mining? Because the last thing we want is to have employees that work for the company that everybody hates.
Yeah.
So it's just like a non-starter thing. So we start from that perspective. And at least in current conditions, there are, if we look at the United States, for instance, there are several states that just kind of are off the list. I don't really care how cheap it is. California, Oregon, Washington, and some of those have some interesting energy opportunities, but to us, they present too much risk, because the risk of being shut down or disrupted in our service or taxed or something like that, it's just too burdensome. Then we shift to the energy, and we look at the energy itself. What's the cost of the energy? What's the long-term projection cost of the energy? Can the energy be produced consistently? And by the way, I look at it a little differently, I think, than some others. I think this is probably a good line of conversation maybe for a little later. So like, I'm not in the business to kind of sit and mine sometimes and sell back my energy other times. I'm a miner. My mission is to support the network. I want my stuff running 24/7. I don't want to play the curtailment game. Um, and so I think sometimes, this is a little sidelight, I think sometimes we oversell and overstate the energy side, like all this stuff about grid stability and curtailment and all that. I'm not saying that that's not important, but to me, it's always secondary. Like, we shouldn't justify Bitcoin's existence or mining's existence because of those things. And I think we often fall into that trap. We're somewhat playing into the hands almost of our critics by justifying ourselves that way, instead of saying, no, we are building the world's safest, most secure monetary network. And I don't need to tell you guys, why Bitcoin is important. Like, we can stand on that alone. And so I think that's really important. So I want to mine, and I don't want to play that game. I think that you see a lot of the public guys play that game, but I think partly what that does, some of you may have heard me be somewhat critical of public mining in general in the past. And part of it is that I think it forces you into a different mindset. It forces you into a fiat mindset. It forces you into a high time preference mindset. And so things like curtailment become very appealing in that environment. So
Because
anyway,
you're getting paid in fiat instead of keeping the machines on to actually hash. Is that basically what you're saying? To get the Bitcoin.
Right. And if you think about what Rapha said earlier, which I support too, is what you're doing the best thing for Bitcoin? So I mean, and we could have an argument of, I'm sure there's some, I could probably argue the other side to a certain degree, but is a Bitcoin mining operation which actively curtails and taking fiat to do the curtailment, really doing the best thing for Bitcoin? That's a question
Super
each of you
interesting
can.
point.
Yeah.
Let me tell you one anecdotal story through all of this. So we have one of our sites that does curtailment, right? And we went through, weather got crazy a few weeks ago in the US, right? A lot of the sites curtail. We had one site that's curtailed. And immediately we look at our hash rate dropped because the site is curtailing, right? And one of the things we like to do is give full transparency, and pretty much we do. So our investors, they can see our dashboard. They see exactly what's happening, real time. The same thing I see, they see. I give them access. They can see, hash rate by site, everything, as much or as little information as they want to get. I get a call from one of them. They're like, "We're not mining." They're like, "No, but we're curtailing, and we're pretty much not gonna pay energy price cost this month because curtailment prices are off the books." And the first reaction is that, "Yeah, but I'm not getting any Bitcoin." I'm like, "No, but we're not gonna pay any energy." It's like, "Yeah, but I don't see any Bitcoin transactions coming in."
Yeah.
And I think that's the right intuition, right? As you said, is we are saving in fiat, but on the other hand, we're not, stacking Bitcoin through mining, which is what we are here to do, right? So I think their reaction was in line with exactly what you're saying.
Yeah. The other thing is, let's talk about the second order effect of curtailment. So the second order effect of curtailment is a drop in global hash rate, right? So the difficulty has been established based on that hash rate being there. So when curtailment happens, especially when it happens at a large scale, which we've seen happen sometimes, block times extend. And what happens when block times extend? Fees go up. So who is paying for the curtailment? It's the Bitcoin network users. So the people gaining from the curtailment probably do. They make more money, especially as measured in fiat in a short window. But who pays for it? It's the Bitcoin users.
It's the users, and I guess the other miners that stay on benefit from it, huh?
Exactly.
They collect those fees.
They benefit somewhat, but remember now blocks are coming less frequently too. So I mean, you'd have to. So in other words, you have less blocks but higher fees, and I don't know. I just I haven't done the analysis yet to look at that to see how all that balances out. But anyway, I think sometimes too. That's why I said grid stability, demand response, curtailment. I mean, all the base load. I mean, all these things. I'm not saying they are not material, but I don't think they are. They are not reasons, in my opinion, to be in the business. And that if you are a miner, if you really want to wear that hat and you want to do the best thing for Bitcoin, it may not, certainly at any scale, I'm not being critical, Rafa, because you have one, but I think it's something to always think about. Like, what are you really achieving what you want to achieve? And it's a free market, it's a free country, you do what you want to do, but think about it. And I would also say this, if you're a shareholder in a public company that relies heavily on that, is your ownership in that company supporting an activity that is doing the best thing for Bitcoin? So now that's how I look at it. Like I say, hey, is this activity one that I want to support financially?
Yeah, we did see, I think hash rate in the US drop a significant amount when that weather hit in Texas, and all those miners turned off to curtail. So that is the second order effect that we have to think about. And Rafa, you said one site, but you decided to use a lot of different sites. And I'm wondering if you could maybe go through that strategy when you're deploying, this amount of hash rate so quickly. Why did you decide to choose all these different hosting partners and different sites? I was wondering if you could maybe break that down.
Yep. I mean, make no mistake, we're new to this, right? So in my perspective, we've been trying everything. not curtailment, including curtailment. And I think the counter argument to what Bob said in terms of curtailment is that in this case, for example, the fact that we had that side, and it's not 100% of our operation, right? So it's a little bit of our operation. That's capital that comes in that we can actually use to finance other operations. And in the end, end up with more hash rates deployed, right? On average. So if I look at the longer period of time, with more hash rate deployed than if we weren't curtailing, right? But of course, that varies a lot from site by site, and I think there are extremes. If you look out there, some of the public mining companies, in some months they're making much, it's not even close. They're making significantly more money by curtailing than by hashing, which again, that's definitely not where we want to get. But I think, Sam, just to answer your question, as I said, we tried everything. We've tried different machine types. So, most of the big manufacturers out there, we've tried different cooling technologies. So we've done air in vast majority, but we've also done one-phase immersion. We're testing two-phase immersion. We're looking at different firmware. So we're trying everything out there to see what works better than others. Mining pools, the same thing. We've been trying a lot of mining pools, and that for me, personally, that's been, I think, the most incredible journey, because I love data, I love analytics, and the amount of data that you get out of all of this is just amazing. And how we can optimize sites now with different things, maybe underclock some machines to get more efficiency. I mean, it's endless. The amount of things that you can do, and just shows that I think we are in the infancy of this industry and where we're heading in the future.
Yeah, it sounds like you're in heaven over there with all that data. Let's talk a little bit about, like, Rapha, for one, you mentioned like how transparency is a big part of Swan mining. And obviously the curtailment debate that we just had, the grid stability issue, it's top of mind for a lot of reasons. The EIA just recently came out with a quote unquote emergency survey asking for a lot of information for these mining operations. Specifically, they said that it could harm grid stability. And, a lot of Bitcoiners took to X, and they were saying how this was an encroachment on privacy of these businesses, just because of the sheer amount of information, including like geographic coordinates of the mining operations, the models they use, what they're mining, how they're mining. And some were just saying how it's clearly, discriminatory against an industry, and it's really political. And I'm wondering if you guys agree with those takes, if you have maybe a different nuanced taste on this new, emergency survey from the EIA. Maybe start with Bob, and then talk about maybe transparency of Bitcoin mining operations in general too. Love to hear it.
Well, I'll start with, I believe it is a big deal. I strongly object to it. I have no plans to respond to it. I view what we do with our machines as the same as what I decide to do with my personal computer. And so what websites I visit, what application programs I run on my computer, I believe is a massive piece of my personal privacy and my freedom. How I choose to use my energy, I think fits in the same bucket. That's both personal and at a business standpoint. And I'm not quite ready to talk about it, but I will say, I'll give a sneak preview to something I've been working on for a long time, which is I have a project that I will soon be more public on, where I will prove to the world that Bitcoin mining equipment, or at least equipment that's typically used for Bitcoin mining, can do things completely unrelated to Bitcoin. And so to say that a given machine is working on Bitcoin or working on something else is, to me, the exact same thing as whether or not I'm running Excel or PowerPoint. It's nobody's business. It's how I choose to use my computing power, and it's how I choose to use my energy. And if we allow moral judgments about energy usage and computing power, then we're screwed.
Yeah. I think it goes beyond Bitcoin even, right? It's like this fundamental,
Yes. Yeah, it is
the
Pandora's
government
box.
can decide what is a good use and what isn't a good use of energy. That is a slippery slope. And you already see that against other industries like AI and other forms of computation.
Energy and computing power. They're two different vectors upon which the attack is, right? Because the attack one is energy uses, but number two is what are you doing with that energy, and or what software are you running, or what application are you putting in? And yeah, I believe it's Pandora's box, and I believe even Bitcoin's most vehement opponents should support Bitcoin in this endeavor, because all it takes is an administrative change and some other project becomes the target of the same thing, right? It could be video gaming could become the target. It could be marijuana growing. It could be, whatever. I mean, there are so many different things, and all it takes is somebody on a moral vendetta against something to come into power if this happens. So I believe this is a like hold your ground, William Wallace kind of moment.
Draw a line in the sand.
This all starts with the wrong principle, right? Which is using energy is bad. Using energy it's actually very good and very positive, right? I'll tell you, we have a few places in Brazil that use very little energy. I'm telling you, you don't want to be there. Like, I've been in the Amazon in the middle of nowhere where there's no energy, right? There's no power to the houses. The power consumption, the energy consumption is very low. And trust me, none of us want to live in these places. They are, you don't have bathrooms. It's the level of infant death is just massive. And this is all, again, like, if I ask each and one of those people if they want to have energy in their houses, they would say yes, and we will all see that as a very positive thing, right? So it's all based, I think, on this very wrong principle. But on top of that, to Bob's point, how we consume energy, assuming that, again, consuming energy is not a bad thing, it's actually a good thing. How we consume energy is up to each and every one of us, right? If I buy energy and I just want to have a capacitor that is just going to burn energy, it's up to me, right? I'm going to pay for that. There's a cost for that, and there's a market for that, right? And is that good use or bad use? I don't know, and nobody should be judging that, right? I mean, I'm the only one that can make that decision for myself. And the fact that they're going after miners as an industry and asking about these things is just absurd, very, very absurd. I think ultimately this is all going to be won, right? I mean, we're not going to be needing to do any of this, but in the meantime, again, it's just more of the bad press that we get out there that we're going to have to fight. It's just another thing, right? Bitcoiners are bad because they're using too much energy and all of these things, which again just don't make any sense whatsoever. But they have appeal to the person that is this without really knowing what's happening and having very little information at the end of the day. So.
Yeah, I couldn't agree more with both your guys' comments, and it brings me up to what Bob was saying when he decides to cite too. Like, you have to think about these like jurisdictional risks. And when you have a government that seems more antagonistic against it, now I think in America, we have a lot of things going for us. We have state laws. We have, protection of property rights in general. And I'm not saying Bitcoin mining is a bad place. America is a bad place for Bitcoin mining, but as a mining operator, you have to think about maybe distributing your sites geographically, I would think. But right now there was a ton of hash rate that moved from China after it's banned to the United States. And I wanted to talk about more broadly, just centralization in the Bitcoin mining industry, maybe at different levels. And I know that Bob, you think about this a lot with the pool centralization that's occurring and how we can maybe provide different options and tools for Bitcoin miners to help further decentralize the entire mining industry. And so maybe let's just touch on a little bit for the listeners about what's going on when it comes to at the pool level, maybe even at the hash rate level, the centralization that's occurring and some cool tools that are maybe trying to combat this a little bit.
Sure. All right, well, let's talk at the hash level first. There has been a movement toward bigger sites managed by bigger companies. And it's difficult for, I call those elephants, those kind of sites elephants. And the rabbits, which would be the individual miners mining at home or in, a small business. The horses kind of being the mid-size, smaller to mid-size commercial miners. That's where Barefoot sites typically fall. It's hard for us to keep pace because if one large miner puts up, let's say, 200 megawatts using S21s, let's say even, right? So they're using the latest equipment with S21s for us to keep some balance in the ecosystem. And like, I believe there's a danger number. Like, we never want to let the elephants get over 70% of the hash rate. And they're not there now, but they're trending that way. Like, then you got to take 30% of that number and say, well, in parallel, then we need, what would that be? 60 megawatts of horses and rabbits to come up simultaneously. But in reality, probably a little more, because they're probably not going to use S21s. They're going to use S19K Pros or S19J Pros even, or something like that. So their usage, or the hash rate they produce, maybe they're going to need like 80 or 90 megawatts to come up. It's just hard for them to continually keep pace. So that's a long-term vector. The real one to worry about right now is at the pool level. And so, like, for me, when I look at a pool, so what is the function of a pool? The function of a pool is to stabilize revenue streams for miners. Because if you're a very small miner or even a large miner, you have expenses that come on a certain cadence. For us, it's primarily monthly. So we have to have a fairly consistent revenue stream as measured in a 30-day window. And if we don't, we can have cash flow problems. So a pool can serve and fill that need. What has happened, though, is that pools have become a massive control point. The biggest one, and maybe the most controversial one right now, has been that they control all the template creation, and they also distribute all of the money. And that leads to two problems. One is we don't really know how they calculate the distribution of the money. And I know, Rapha, I've heard you speak on this as well. I can attest to it. We have small amounts of hash rate at several pools. And I can tell you there's massive discrepancies between different pool operators, even with the same payout method, for instance, FPPS. Sometimes as much as 10% over extended periods, but typically even 3 or 4% is very, very common, let's say over a 30-day window. Well, how can that be? How can two pools with the same payout method have such huge discrepancies in what they're paying miners? We don't really know. This is a transparency issue. The second more important thing, though, is that at this point, we only have about 15 places where block templates are created. So all this stuff about ordinals and BRC20 and spam and all that, a lot of that comes about because there's only 15 different points of block template creation. And in reality, there's about 6, because the top 6 pools create over 90% of the templates. That's a huge censorship issue. I'm not so worried about 51% attack, at least right now. What I worry about is censorship. And by censorship, I want to define that term. I mean a directed attack against the person or organization to prevent their transactions from ever going through. And so, in other words, it's not the type of transaction. It is directed against the person or the organization. To me, that's censorship, and that's what we have to be most concerned about.
Yeah, Rapha, I don't know if you have any thoughts on what Bob said or generally.
This is a super fascinating topic. And Bob is spot on. Like, we did the same thing. As I said, I love data, and my team loves data as well. So one of the things we did early on, as I said, was to try different pools and take a look at the results. And it's very simple, right? You deploy hash rate to a pool, and it's simple math. You just look at, okay, I deployed this amount of hash rate. This was this percentage of the network at that point. This pool found these blocks. This is the amount of transaction fees that were expected through that period, right? And you would think that if you look in a period of 1 day, right? Let's pick a random pool and I look at what I deployed, the blocks they found. I'm not even talking about, blocks that were found in the network. This consider the fact that, transaction fees outside of their blocks may be high or low. If you just look at their blocks and you look at how much they pay, they don't pay you exactly what's in the blocks. Explain to me why. I know why, but that shouldn't be the case, right? I think pool operators have the privilege of constructing blocks on top of the proof of work of the miners, right? The proof of work is the important piece here, and it belongs to the miners. It doesn't belong to the pools, but the pools go and on top of that construct the blocks, right? Up until recently, and I think probably true in the short future as well, a lot of the mining operators don't care about that because they don't see value in block construction. I think that's going to change in the future. There's going to be a lot of value in block construction, and this is one of the reasons why we want to anticipate and start being on that. But just going back to the point, like when we looked at the data, and we still have this running like in different pools, and you notice some things. First is what Bob mentioned, like huge discrepancies in what expected versus paid, huge discrepancies between them. Some of them pay consistently a little bit more, which it's funny. Others pay less, right? But there's huge discrepancy. And the other thing on top of that is when transaction fees spike up and when you have a lot of volatility in transaction fees, meaning, one block is paying, I don't know, 50 sats per VByte, the next one is 100, whatever it is, right? That gives a lot of room for the pools to play games. They know about that. And I guarantee you, because now we've seen the numbers, they play games around this, right? And remember also that the pools are offering a service to the miners, and on average, miners pay a lot to the pools, right? That should be how they get income. They shouldn't be getting income on top of transaction fees. And just to conclude the point, we've all seen the examples when pools find, a block that had an error in transaction fees with very high, transaction fees, like 80 Bitcoins in a simple transaction fees. And then the pool makes the decision to return that to whoever it was, right? Taking aside if that's right or wrong, just the fact that they have the power to do that should scare every single miner, right away, because that power shouldn't belong to anybody. That, again, that decision should be with the individual miners who at the end of the day control the proof of work, which is the real asset in all of this, right? They are paying for the energy costs, and they should control that, not the pools. And this is honestly one of the reasons why we got really attracted to Ocean and what they're doing, because there at least we know exactly what we're getting. I can see how the block is constructed. I can see the block that they found. I can see how much. Immediately I see, they find a block and immediately we get paid, right? I mean, you have 100 blocks and you get paid. You receive the Bitcoin and receive Bitcoin from the Coinbase. And I think that should be a premium for something like that, right? Because it's full transparency.
Yeah, we'll definitely we'll get into this. It just seems it's concerning when you see like Foundry and Ant Pool, the two largest pools. I saw something like they mined like the last 20 blocks or something like that. And like for anybody, that seems to be like you have to worry a little bit about that trend. And then you saw some censorship with F2 Pool earlier in the year.
Pool did it.
Yeah.
So, real censorship. Yeah,
real
just to be
censorship,
clear.
right?
That was
being compliant
trying
with
to
OFAC.
be OFAC compliant, right?
And so there is concerns, and so Jacob, if you could throw up, like we brought up Ocean, and I know Bob, you were like the first client, I believe, in Ocean, and this Corey sent this, kind of cryptic tweet. I love the smell of hash rate by the ocean in the morning, and you just see the spike in hash rate, and obviously that coincides with Swan Mining. So you're pointing some hash towards, Ocean. Let's maybe Bob break down like what Ocean is and how it could potentially, help move this trend in a better direction, I guess you could say.
Yeah, thanks. Yeah, and I want to be fully transparent. So I am on the board of directors at Ocean as well, and I have an investment through my fund in Ocean. So I want everybody to know front and center where I stand on this. But why did I do that? Why do I have? Why did I dedicate my time to this and my money to it and my hash rate to it? It's because when I started looking at this, I've been doing these hash rate studies and pool distribution studies for quite a while. We've been running these, and I didn't like what I saw, just like Rapha said. I was looking for alternatives. I had come to the realization, frankly, that I'm not really a miner. That in today's environment, I think everybody has to look in the mirror and say, "What are you really?" Well, unless you are a pool operator today, you do not connect to the Bitcoin network. So all miners in the current environment, or organizations that call themselves miners, are really just hashers. They are hired guns, subservient to the pool and the pool's decision making. The pool decides the payout. The pool decides what transactions go in the block. They decide in reality when they're going to pay you. Your money is in a custodial situation, right? The pool becomes the custodian of all the miner payouts. There's a lot of things that really bothered me. The other thing is that for me, I have come to the realization, I've spoke a lot about it in 2023, that block space itself will become the most precious real estate in the world. And it is a commodity in and of itself. And whoever controls access to that block space is in a very powerful position, first of all, and has a great economic advantage, but also a great responsibility. Just some of the numbers that I've talked about in other shows, but there's only room for about 200 million transactions per year. So if we use like Swan's current number, Swan has roughly 1% of the world's hash rate. So on a go forward basis, Swan's hash rate will determine 2 million of the 200 million transactions. Now, if they choose to, if or say they, it's you, right? If you guys choose to defer that power to Foundry or Anpool or whatever, that's your choice, or you can take control of that yourself and you can create those block templates yourself. And right now, and getting back to your question about Ocean, the reason I joined was I want that. I want to be, for at least for my scale, I want to have that responsibility and that power. I want to make those decisions. And that's how I vote. It's kind of how I vote about what's spam and what isn't spam, how I vote about what's ethical and moral. So Ocean is the only pool that's going to allow that to happen, at least currently announced pool, where they will move block template creation back to the miner. So you'll still be part of a pool. I'll be in Ocean and Swan can be in Ocean. And if it happens to be one of my machines wins the block, well, Swan will still get whatever percentage of the hash rate they contributed to the pool, whatever share they put forth, they'll get paid that percentage, and so will I, and vice versa. When Swan's machines win a block, then I'll get my share. But we each get to make our own decisions, and they get to control 1%, and I get to control something less than 1%. I believe that is an extremely powerful point. It needs to be made at hundreds, if not thousands, of different miners around the world at all different shapes and sizes and geographies. That's how we become censorship resistant. I'll also say this, just as a little sidelight, that a lot of people believe that there is this imminent merge of Bitcoin mining and energy companies. I think that's wrong. I think you'll see a little of that. I believe the merge that's coming is Bitcoin mining and financial services companies. And it's because of this that those 200 million transactions, which we really can't change that number, that's it. So if you're in the business of, if you're a financial services company, you've got Bitcoin related transactions that you need executed, the best way for you to take control of that situation is to become a miner. And now you can control block space. But Ocean is the enabler of that. Ocean will move block template creation back to the miner, at least the choice. And even right now, it at least gives miners the choice of 3 different templates. They can make whatever decision they want about the 3 different templates, which have different filtering criteria. Anyway, I've probably rambled enough about that.
No, I'm like super fascinated with this stuff. So we're just gonna keep going into it. Like, Rapha, have you enjoyed using that? Just like having that, template creation on the Swan Mining side. What differences have you noticed being an actual user, of a miner pointing hash towards Ocean versus maybe some of these other pools?
And to be clear, and I think this is part of some of the confusion with Ocean in the beginning. Right now, we can't construct the blocks yet. That's something that they're going to make available in a few months, right? So they're working on that, but that's exactly why we want to be close to them, to have that ability whenever that becomes available. I think, there's a lot of confusion, Sam. I think when people talk about pools and they talk about what Ocean is doing and about what's happening in this space, I think, let me try to separate a little bit of the point. So First of all, the main reason why we decided to go to Ocean was transparency, right? And I think, to Bob's point, long term, there's going to be a market also for block space. There's going to be a massive market. We want to be early on this. We want to take advantage. We want to learn how to do this. We want to make some of this market, and that's going to take time. But then the other thing is, when you look at the Ocean right now, right, or at least where they were at the beginning, is the problem is that there isn't a lot of hash rate that is deployed to Ocean yet, right? And different than other pools, where the pools will pay you regardless if they find the block or not, which that by itself should make people question of where's the money coming from, right? The fact with Ocean is that you only get paid when they find blocks, right? And the more hash rate they have, the fastest the blocks are going to be coming, right? And not only that, the variability between blocks also drops significantly. So right now, the Ocean has around 1.2 exahashes on their pool, and it means they're going to find a block, on average every 3 days. But probability is in the root of everything in Bitcoin, right? It's the same thing here. It could be a little bit more, it could be a little bit less, right? They found last week they found 2 blocks pretty much like in sequence. There was a period in January they pretty much spent a month without finding a block, right? And that creates issues for some smaller miners, because if you're a miner that needs to pay bills every week, every other week, right, and they didn't find a block, you still need to pay energy bills, right? And that could create some problems. One of the main reasons why we wanted to deploy hash rate to Ocean was to help with that, right? And we think, and what we want to see now is that hopefully that will bring other miners into the pool as well, because the more and more people that join, the better and better this service is going to be. And at some point, as Bob was mentioning, this is better. This has to be substantially better than what you have with the other pools. First of all, it's decentralized. Second, it gives you back the control on creating your own blocks, right? And then third, as I said in the beginning, the pool operator should be paying us and not the other way around, right? The large miners, they all negotiate fees that are fairly low with the pools, but at the end of the day, if you're a smaller miner, some of them are paying like 2.5% of their blocks to the pools. It's a gigantic amount of money for a service that, as I said before, it should be paid the other way around, right? So,
yeah. Is Ocean? It sounds like, I've been interested in learning about Stratum V2, and for anyone who doesn't know, Stratum V1 is like a communication protocol where miners can communicate with the pools, and Stratum V2 will basically allow the miners to create the block template themselves, if I understand it correctly. Is Ocean doing this differently, or is it utilizing Stratum V2? And then my second question is, are pools going to be incentivized to adopt Stratum V2? Is there a reason why they would be incentivized to adopt it? Why wouldn't they? Bob, I was curious just to learn more about that.
Well, so there are two components to Stratum V2. One is encrypted communication, and the second is the block template creation. There's other minor things. What I can say about Ocean is that the encrypted communication part for sure will be part of the go forward method. I can't yet talk about the specifics of how block template, pushing block template creation to the individual miners will be implemented. We're not ready to make a public statement about that. But suffice to say, each Ocean will be in a position to allow that to happen, and will be providing assistance to people who want to do that. Because one of the things it does is it forces each miner to now run their own node. So I talked about that before. Like if you're a miner, if you're a hasher today and you're connected to a traditional FPPS pool, which basically every other pool in the world is, even Brains, which was a PPLNS, which would, in simple terms, meant you were paid on block wins, much like, and you had the kind of that inconsistency in revenue. They've moved to FPPS in December, so we pretty much have the whole world now with no transparency on how block templates are created, how calculations on miner payouts are made, all that sort of stuff. But anyway, the block template creation will require running a node, setting your criteria or your filters. And I want people to freak out about filters too. Every single pool uses filters. You have to. There has to be a method by which, right now, if mempool has 250,000 transactions and you can only place, let's say, 3,000 in the next block, well, there has to be some criteria by which you select those 3,000. And so when we talk about filters, that's what we're talking about. What is the criteria by which that takes place?
I just have one more question about pools. It's a fascinating topic for me.
To add to that point, Sam, very quickly on
sure.
what Ocean is doing, I think the other thing that is missed among everything that Ocean announced, people are not talking about this, but I think it's huge. They are going to be transitioning, I think, into Stratum V2 later, and they're going to be making payouts to miners, at some point through Lightning, which is this. This changes everything, right? You can pay smaller amounts. You can pay quicker. So everything that I just mentioned regarding, smaller operators having to wait, they're not going to have to wait anymore, because as soon as they contribute hash rate, they get shares. They could get paid to those shares, right? There's a market for those shares. This is huge. Like, people are I think they're thinking on very, very limited scope when they're thinking about what's going to happen with the market for block space and in the future, right? And just to bring it to the beginning of our conversation, all of this is going to lead to things that are much better to Bitcoin. More people running their nodes, more transparency, things are going to be less permission, right? So again, I think it's less being custodial than it is right now. So at the end of the day, we're heading the right direction with these movements, and people should be happy about them, and not, focusing on like the filters that are happening right now, which I think is a very, very small thing on the overall results that we're going to see out of this.
Yeah, if I can, I want to add one thing to it. It jogged something that I think is important to bring up, Rapha, and that's that some people in the mining industry have said, well, I'm never going to use Ocean. I am a profit maximalist. I'm going to mine the fattest blocks. I'm always going to mine the one that pays me the most money, irrespective of other factors. And I find it, to each their own. Okay, that's one of the parts. If you're a miner, you pick, you can do what you want. But I don't understand. I don't know of very few companies truly are profit maximalists. Like, and even if you are you a profit maximalist for the next block? Are you a profit maximalist for the next day? Are you a profit maximalist for the next year? Do you have some responsibility to, I call it protecting the mothership. If the mothership is the Bitcoin ecosystem, do you have some responsibility for that? If you're a profit maximalist, if you're saying that, are you hypocritical because you're also contributing to, let's say, the Satoshi Action Fund or the Bitcoin Policy Institute? Like, why aren't you keeping all the profits for yourself? Why are you helping these organizations? And so I know I'm saying something like I applaud companies that are supporting Satoshi Action Fund and Bitcoin Policy Institute, the Digital Chamber. Like, those are important things. I do my thing in a small way. I'm sure Swan does things with those organizations too. Why do I do it? Because I'm protecting the mothership. And in reality, I am a profit maximalist, but I'm a profit maximalist with a low time preference. Because so I find it very weird that this profit maximalism and that somehow these quote unquote miners are like they're almost the epitome of like capitalism, like in the bad way, right? Like the old view of the capitalist that will just burn bridges and do anything to make the quick buck. It seems inconsistent.
Yeah, instead of thinking long term about things. If it's good for the network,
A
it's going
lot
to
of
help your
miners
profits
got
in
in
the
trouble
future.
exactly because of that mindset, right, Bob? Because they are looking at the next quarter, they're looking at the next bonus payment for the executives, and that is the fiat mentality. And when they think about profit maximizing, they're thinking about the next announcement they're going to make to their shareholders, and not thinking about the value that they're going to be adding to the network in 10 years, right? None of them think about that, and I've heard that time and time again. People coming to me. I had a very heated argument when we started to go to Ocean. People saying, "Oh, you're not maximizing profits. This is just going to a casino." And I said, "No, you're absolutely wrong, and have fun staying poor, because 10 years from now, we're still going to be here. We're going to be taking advantage of things that you don't even think are going to exist, because, as you said, the most valuable piece of real estate that we have, it's valued at zero right now, because people just don't see where this is heading, right? And even if it doesn't, just the optionality of being there, if it does, should have some value, right? And we should be early on that to take advantage of that.
Yeah, and I will say too, one final thing too, is that what we have at Ocean right now is a microcosm of what's coming. So when you sign up as a miner with Ocean, you pick one of three templates. One of the three templates is, we call it wide open, right? You can take Bitcoin Core with essentially filters down to a minimum, and the block that you're going to direct your hash power to and mine will be that way. So if you don't believe the importance of individual block template creation and a responsibility to protect the mothership, that's your call. You can go do it, but you're not serving Bitcoin. I mean, don't try to fool yourself or fool other people in that you're some sort of a Bitcoin maximalist or you're living the ethos, because you're not.
Yeah. The last thing I just, before we go, I want to talk about what Bob said about the merging of financial institutions and Bitcoin mining. I think that's really interesting, because it makes sense to me, especially with these ETF approvals, these large issuers having to buy Bitcoin and move Bitcoin around. Controlling the access to the block space and creating the block templates and making sure their transactions go on, not only at the nation state level, but at these financial institutions. I do agree, Bob. I think it seems obvious that we will see some of these institutions get into mining. I would love to hear you just elaborate a little bit on why you think that's the case. And when maybe we might start to see maybe some acquisitions from the BlackRocks of the world. I mean, it's crazy to think about BlackRock mining, but do you think that's the future we're setting up for?
I think it is the future. I think it's way faster than people think. I'll contrast it first of all to the energy companies, because I think the common narrative in the mining industry is the merge of the energy companies and the mining companies. And I'm not saying there won't be some degree of that, but I don't think there's an urgency from the energy markets to get involved in mining. I think it will continue to happen relative to the entire grid and all energy production at a very small scale. I believe the financial services companies, one, have a reputation for moving much more quickly, right? They're used to mergers and acquisitions and big investments. They do that on a much faster time frame. I think as the reality sets in that, hey, there's only 200 million base layer transactions a year. And right now, I use BlackRock as an example. BlackRock with their ETFs, the amount of movement and base layer interaction is very small. And the expense line of doing those base layer transactions is minuscule in their P&L statement. But I believe we're going to see block space scarcity become like the really a predominant theme and issue within the next epoch, so the next 4-year cycle. And I believe we're essentially on the cusp of it already. The BlackRocks of the world are going to realize, like, hey, if we want to provide services in the Bitcoin world, and we need to interact with this, then we need to know, one, that we can get access, and two, have some degree of certainty about what those costs will be. So I think they're going to be very aggressive. The Bitcoin mining industry is still tiny, right? I mean, the revenue in 2023 for the entire mining industry was something on the order of $10 to $12 billion. So, you know, they can come in and they can buy a position in the mining industry very, very quickly. I think we'll see a lot of acquisition activities in the next epoch. Big companies like that trying to buy private miners, trying to get controlling stakes in public miners, establishing relationships with mining companies who are doing block template creation. All that sort of stuff, I think, is going to be a massive piece of the next cycle.
It's fascinating. Rapha, do you agree?
Part of me doesn't want to see those two worlds collide. You know, I escaped from Wall Street, but I think that's it's a reality. They are colliding already, right? I think the ETF is the first step, and there's going to be more and more of this. Like we've seen Fidelity Mines, right? They've been mining for a while. We know they've been operating some mining. They've done a lot of testing, you know, lightning nodes, all of that. So it's a matter of time before. Imagine if you're BlackRock 5 years from now and you see transaction fees are through the roof, right? They can't get confirmation. They need to confirm their ETF daily purchases because they need to buy Bitcoin, right? And they can't get it confirmed. What do you think they're gonna do? They're either gonna get close to the miners very, very quickly. I guarantee you that, and they're gonna find ways to get into the blocks, right? And that's one organization that's gonna happen with everybody as this becomes the global monetary base layer. It's obvious this is gonna become, right? This is the kind of like the whole settlement layer. It runs like this. So yeah, this is it. It's gonna happen. Like if it's happening in 1 year, 5 years, 10 years, I don't know, but it will happen.
Well, it's exciting, but it's also, I think it's, you know, light a fire under the community to keep building products that help decentralize it, right?
Yep.
So that these institutions can't censor and do things like that. But Bob, you've called the ETFs, you know, gradually is over, suddenly is here. In terms of where we are in the Bitcoin, you said it marks the end of the Bitcoin introductory period, and kind of creates this new era. And you also just announced a new partnership with FA Magazine, Financial Advising Magazine, and that's exciting. So why don't you tell a little bit about that and maybe your overall thoughts about this ETF being this new era and what it means?
Yeah, and I think it was, to be clear too, the ETF was just one more brick, like on something that's been being built for a long time. But I do think genuinely it marks the end of an era. And my relationship with Financial Advisor magazine somewhat is an indication of this transition too. So for those of you who aren't familiar, Financial Advisor magazine serves, it's something on the order of 800,000 financial and wealth advisors in North America. So it's a publication that kind of is an industry specific publication. And until the spring of last year, they had never even covered anything with Bitcoin or cryptocurrency or anything. It was just like sacrilegious for them to even cover it. They reached out to me last spring and said, "Hey, they were aware of me, and for those who aren't familiar with me, I was part of the personal computer company Gateway. I was part of the management team that took them public, and I was the chief technical officer there. So I sat in the C-suite of a Fortune 200 company, and I think that's what attracted them to me, was that they thought, well, hey, maybe here's a guy that has the credibility, at least the resume, that our financial advisors would listen to. And so they asked me to write an article for them last spring. And the article was on dispelling the myths about Bitcoin. You know, what were the myths and why were they not true? So I wrote that article. It got massive response from that community. It was clear to them after that article was published that there was a massive underserved market in that community, that those people wanted to know about Bitcoin. It was clear that they were being asked about Bitcoin. They didn't know how to respond to it. So I wrote a second article for them later in the summer, and then they said, hey, this is like really big. So we would like to pursue a different type of relationship. So we worked on it for a couple months, and we came up with the idea, or they came up with the idea of a monthly newsletter. So, so I'm now authoring. Started with a December issue. I've done a December and January issue for them. We're just kind of making it a little more public, though, and it's not so much, like I said. I think I said to you this earlier, Sam. It's not about me. It's about the fact that a magazine like this, serving that community, feels a need, an urgent need, to educate this group of people. And they were essentially the enemy, or at least almost antagonistic to Bitcoin prior to that. So to me, it just shows us we're in a different segment. And I'll say one last. Oh, go ahead, Sam. I'll stop there.
No, I had experience back in 2018 talking to a lot of financial advisors, and I was kind of baffled by the lack of education then. Laughed out of the room. I realized this was really early for that community. So it's exciting to see that shift happening, and it kind of represents a new era, I would say. I agree completely. And then one of the reasons why I spoke to them was I saw them as like a one-to-many orange pill, because obviously they're talking to a lot of their clients. They manage trillions of dollars. And once they're better educated in Bitcoin, they start to tell their clients, who then start to tell their friends. And it's kind of this one-to-many, where they're the ones giving advice. And if they're better educated on Bitcoin, it's really exciting for have somebody like you, who's now writing a monthly newsletter, who can educate them properly on this new asset class. So kudos. That's all I was going to say.
Yeah, well, thank you. Like I said, I'm honored. And one last thing, just about the kind of the end of the era. I think that the halving is part of that too. And so I'm kind of on a macro level, just kind of saying the halving's already here, right? I think that this halving is material, in that the subsidy is now so low in Bitcoin terms that it's kind of like the beauty of what Satoshi created is it's now kind of getting to that point where it's like, hey, you're not a child anymore. That you're entering. I kind of view it as almost like you're not a child anymore. You're entering adulthood. The subsidy is basically over. And the subsidy, I think a lot of people think of it as just a subsidy for mining, but it's not. The subsidy was a subsidy for all of us. It was to give all the users of the network essentially free access to this magnificent digital network, this most secure network ever created. And the free ride's over. It's like, hey, you've turned 18 now, you're off on your own, start earning your keep. And the rules will change, right? You know, you can't, mom and dad aren't going to help you out anymore. Like, you're on your own. And so I think that's where we are.
Yeah, I mean, the halving certainly, like, block subsidy is getting pretty low. I mean, there's no way about it. There's already been 19.6 million Bitcoin mined at this point. Actually, that was like the title of this episode, I think. So maybe Rapha, maybe we could just end with some thoughts on them halving, because I know that's part of the reason why you guys wanted to deploy so fast, right?
100%. Yeah. Every day we wait, cost us a lot of money until, 75 days or whatever it is from now when the halving happens, right? So this is exactly why we deployed fast. But to Bob's point, the halving is inevitable. Thankfully it's inevitable. It's one of the most beautiful pieces of the Bitcoin code. And this, I remember when I started, venturing into Bitcoin, and I was very paranoid about the 21 million cap. And when you see how it's done through the halvings and how you really get there, and you see that line of code, right? That, I think, along with the difficulty adjustment, it's geniality at its best, right? And when you look at that, then you understand why Bitcoin is inevitable.
100%. Well, you guys have been really gracious with your time. So just wanted to throw it out there. Just if you could let people know where they can find your work, maybe final thoughts if you have any. Bob, start with you and then finish with Rapha.
You can learn about Barefoot Mining at barefootmining.com. I am on Twitter at boomer_BTC. I do a little rant podcast. You see it in the background, called Old Man Yells. And that's on YouTube and Spotify and places like that. So
thanks, Bob. Rapha?
Yeah. First of all, thanks for having me, Bob. Thanks for being here. As I said, you've been an inspiration for us through this journey. So thanks for everything you've done and everything that you do for Bitcoin. But people looking to find me, I'm at Twitter at Alpha Zeta with 2 A's, Alpha Azeta. And also would tell people to check out nakamotoportfolio.com, particularly for people thinking about allocating Bitcoin to their portfolio. That's something that we build fully open source, again, fully transparent. You can just see how Bitcoin would perform in any traditional portfolio. So yeah, and there are other things there, the research pieces, and as I said, 100% free, 100% open source.
Well, I learned so much from both of you guys. I think you guys are both criminally underfollowed. So thank you for joining Swan Signal. If you're listening, follow these two gentlemen. Rapha, congratulations on Swan Mining, that launch. Excited to watch that develop. And Bob, best of luck with Barefoot Mining and that new newsletter. Thanks so much for joining us, guys.
Thank you.
Thank you.
Well, I hope you enjoyed that. I really enjoyed talking to Bob and Rapha. They're two builders, right? They're actually deploying hash rate. They're on the ground, and they have so many insights to share, both from their experience running companies, working in Wall Street, to now being Bitcoin miners. I learned so much from them. So I hope you guys enjoyed that episode of Swan Signal Live. Please follow the Swan YouTube page if you haven't already. That always helps us extend our reach to more and more followers, trying to push Bitcoin's adoption and spread the message and educate people on why Bitcoin is important. Like, comment, subscribe, all that stuff. Let me know what you thought of that episode. We're shooting another exciting episode over the next couple of weeks with some people in traditional finance that I think you guys are really going to enjoy. And just thanks so much for listening. I always appreciate your support. And I am out.